Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Previously, we counted this structure over here as a double zigzag WXY to the downside. But this morning, I went to the 5-minute chart and I was able to count this as an ABC simple zigzag as well. And that opens more possibilities for this range. So what we're going to do in this video is go through the different scenarios where this structure will have a different label all the time. This structure, a simple zigzag, can be part of a wave A, B, W, X, Y, Z, or a triangle. And what I've done this morning is basically go through all of these scenarios, go through the probabilities as well. I want to start with the lower probability scenarios, end with the two high probability scenarios, and of course end with the probabilities. But it will also teach you how you can look at the range by only analyzing one particular structure. Now, if we look at this structure to the downside, being a wave A or a wave W, we're looking for a three-wave structure, A, B, C, or a W, X, Y, because a wave A or W is the start of something. It's the start of a three-wave structure. The problem in this particular scenario is that you cannot really end any previous structure that you then count over here at this high, right? Because you're going to be looking for a WXY or an ABC or anything to end at this high if you're going to start with a brand new structure over here, but it's not really possible following the Elliott Wave rules, which then lowers the probabilities of this particular scenario. If we count this move to the downside as a wave Y, then we have a zigzag in a wave Y, which is no problem, that's fine. But in a sideways double combo WXY structure, wave W and wave Y are not allowed to both be a zigzag structure. And wave W over here is clearly not a flat, because a wave W can only be a zigzag or it can be a flat. Now clearly it's not a flat over here, which then also lowers the probabilities of this scenario, because you have a zigzag in W, zigzag in Y, and that is not allowed unless you speak about a double zigzag structure in a sharp WXY scenario, but then you want to see wave Y going below wave W, and also wave X over here, this move to the upside retraced to the 0.9 Fibonacci taken from the high to the low of W, which is really too high for a wave X in a double zigzag, as the 0.7 is actually a maximum target for wave X in a double zigzag. So all of this lowers the probabilities of this particular scenario. Now a WXY-XZ corrective structure in general is a very rare corrective structure and therefore never has the highest probabilities unless all of the other scenarios are going to be invalidated and this one remains. But the main problem of this scenario in this range over here is that you're only allowed to have one zigzag in wave W, Y, or wave Z. So if wave Z is then counted as a zigzag ABC to the downside, wave Y and W are not allowed to be a zigzag. But as you can see, wave Y and wave W look like a zigzag structure as well, which invalidates this scenario, while in general a WXY-XZ, as mentioned, is incredibly rare. If we count this structure as a wave X to the downside, then we need to think about a WX and then a wave Y. Now because wave W over here is a zigzag, because we don't have a flat here in a wave W, wave Y is not allowed to be a zigzag, and therefore it has to either be a flat in an ABC, which we didn't get, or it has to be a triangle, which is also again a scenario that we did not see coming from this low towards the upside. And looking at this structure over here, it really lowers the probabilities of this scenario being a WXY structure. After wave Y, you do expect to move to the downside, but that is something that we talk about in the higher probability scenarios, where we're getting now. This is the bearish scenario, where we're looking at this range as a complex structure in a W or a wave A, X or wave B, and then a C or Y to the downside. Now, generally, based on the newest rules of Elliott Wave International, a wave A, B, and C expanding flat has a very low probability if wave B by itself is a flat structure. And this wave B here is a regular flat 3 wave A, 3 wave B going to the 0.9, a minimum target for a flat structure, and then a 5 wave move to the upside to finish wave B. And therefore the preferred scenario between the WXY or the ABC is the WXY at the moment. Now in this first structure, wave W, we're then looking for a running flat in a 3 wave A, 3 wave B, 5 wave C to the downside. Then we have the regular flat, and then we're looking for a higher probability at least for a wave Y to the downside, where a wave Y can be a zigzag, a flat, or a triangle. Now, based on the price action we have, it's of course difficult to know what is going to form. We definitely need some more time, but a zigzag 535 to the downside is an option. A flat structure where you're still going to take this high, reach the yellow target box as well between 38.5 and 39k, and then reject in an impulsive wave C to the downside is also still a possibility. And you have a triangle that is also still a possibility, even though with the local market structure that is not really something that I would be looking for at the moment. But this is one of the two scenarios that have a good probability based on this structure as well. And then we have the more bullish scenario where this final leg to the downside is a wave E, ABC in wave E, and then we're looking for this to be a wave 1, retracement in 2, before then continuation to the upside in a wave 3. The most common target area for a wave 2 is the 786 to the 05 area over here, taken from the low of E to the high that we made at the moment, which is between 37.1k and 36.2k, after which you then want to see a bounce and continuation to the upside. Now, if we then look at the probabilities of the different scenarios, then in both of the scenarios we are looking for a bit of a drop, right? In a wave Y, we're looking for either a zigzag to the downside, a flat for lower prices, or a triangle over here. And in the bullish scenario, we are looking for a retracement in a wave 2, where preferably price goes to the 0.5 to the 0.786 area. But if we look at these two scenarios, the higher probability scenario at the moment is this WXY sideways corrective structure. Mentioning WXY specifically because, as mentioned during the explanation in the video, an ABC to the downside with a flat in a wave B over here has a very low probability. Officially by Elliott Wave International, it's not allowed anymore, but there's no certainties, only probabilities. It just lowers the probabilities you're going to get a wave C to the downside, increases the probabilities of a zigzag, flat, or triangle, but generally it does mean that we are going to be looking for a bit of a move to the downside, where we do have some support just below price over here. We have a new fresh target box between 37.2k and 37.4k, and then this one was already on the chart, 36.3k to 36.5k, and then of course the yellow target box as resistance, 38.5 to 39k. I hope this video was helpful and valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.